Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
Who is Vinny Smile Chopra? Came to the U.S. from India with $7 in his pocket, and today he has created a portfolio of over $200 million in commercial real estate. He's a CEO of 5 companies, acquiring and managing diverse multifamily portfolio of 3,500 units, and his team self-manage all the assets. Vinny has walked the walk with over 26 successful syndications during multiple economic cycles, including downturns over 12 years. He has built a very extensive educational academy to teach and mentor investors. Vinny, tell us about this Multifamily Syndication Academy.
Thank you, Whitney. Thank you so much. I'm really proud to really talk to everybody about this extensive multifamily academy that teaches new and sophisticated investors how to use other people's money through syndications. That has been my world, to buy apartments from 50 units to 500 units, and how to select emerging markets, how to do deal analyzing, investor education, other people money, syndication blueprints. Everything I have learned, I teach in this academy, and over 500 lectures, and also how to manage the assets also, and along with lots of great templates and PowerPoints, everything. And I personally also mastermind coach all my students every Wednesday. So to reach me, Whitney, all the students have to, or investors have to, just text the word learn, 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 to 474747, or call my team at 925-766-3518.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest owns over $130 million of real estate and is crushing it in the syndication business. And his name is Danny Randazzo. Thanks for being on the show, Danny.
Whitney, thank you so much for having me on. I'm excited to be here.
Yeah, Danny, it's a pleasure to have you, and it's a pleasure to know you. Just another guy in the business that's really working really hard and making things happen. And Danny's an author, entrepreneur, host of a real estate mastermind. He's a national speaker, a volunteer with the First Tee. He has over half a decade of professional experience working as a financial consultant. He advised multi-billion-dollar companies and helped them achieve results in areas that include improved revenue performance, increased profit margin, and enhanced technology utilization. His passion for financial freedom started when he was 5 years old, running small businesses to make extra money. That's impressive. In high school, he read real estate books and studied finance to understand the power of owning assets. His commercial real estate knowledge from books gave him Caitlin, is that how you pronounce your wife's name? Caitlin,
yep,
the courage to buy their first investment property, which was a $1 million building. Wow. Within the company, Danny is focused on building relationships, investment analysis, and planning. Their current focus, Danny and his partners invest in 150 unit plus multifamily properties valued between $10 to $50 million that generate positive cash flow and have value add opportunities to achieve investor returns. So Danny, thanks again for being on the show. Why don't you give us just a little more about what, about your all's company right now and what you're focused on, and get us up to date.
Yeah, so my partners and I run a company called passiveinvesting.com. And if you want information about us, you can just go to passiveinvesting.com. But we do multifamily syndication. We look for value add apartment communities that are around 150 units or more, that are between about $10 to $50 million in acquisition price. What we found is that these specific types of opportunities that we pursue have very good opportunities to generate returns, and for our ability as operators to control some of those day-to-day functions, like how much income is generated and how our expenses are doing, where we can really fine-tune the value of that asset and also add in extra money to increase the value of the units to ultimately rent the units at a higher price. And so we really target cash flowing, value add, multifamily opportunities. And that's really what we focus on today. And I know from my bio, we kind of stretch all the way back to being 5 years old and learning about businesses and learning about money and things like that. And that's definitely been something that's really shaped who I am today and how we operate as a business.
So, I would like to ask you about what triggered that as at 5 years old. Was there something else that got you thinking about having a business or trying to make money at that age? What was that?
Yeah, when I grew up, I just grew up in a middle class, kind of your average family in Michigan. And I had excellent parents who always kind of gave me the opportunity to do my own things. All of my, needs were met. And some of my wants, they forced me to work for. So, whenever some scenario like that came up, it was always, not about getting things provided to you, but how can you go and do things for yourself? And so I greatly appreciate what my parents did in instilling that kind of work ethic and that mindset of, anything is possible. You just need to work hard to figure out how to get from point A to point B. And so that was very instrumental to my youth and growing up and kind of running some of those businesses. And one important lesson that I learned at the age of 5 years old, that when my net worth was completely demolished to zero, it was a very emotional event for me. And I actually just wrote a children's book about it. It's called The Boy Who Lost His Wallet. And it talks through the real life story of Danny and how this young boy loses his wallet and his net worth goes to zero, and he is dramatically affected by this event, and he learns a valuable lesson about wealth. And so I came up with a 5-part book series called Wealth Lessons for Kids. The Boy Who Lost His Wallet is the first book in this series, which focuses and helps parents or adults talk to kids and children about how to protect their money. And what I want to do is kind of break down this barrier that money is some taboo conversation that we don't have at the dinner table, which is absolutely wrong. We should be having conversations every day about how to take control of this tool. And that's all that money is. It's some tool. It's not the end all be all. It's not what we should be thinking about day in and day out, but it's a tool that if we can take control over it and control our money rather than it controlling us, it can really shape your future and your financial destiny for the better. And so I had to write this book. I had to get it out there and kind of share this story, because when I do that, people always say, well, I wish I would have learned that at a younger age so I could be in a better position today. And so I had to get the story out there and share it. And so I think it's going to add a tremendous amount of value. And hopefully, we can just continue to break down this barrier about having money conversations with the young people around us.
No, that's awesome. And just before we go on, would you watch? I hear a bunch of clicking. It sounds like somebody typing, but I think it may just be your mic hitting your shirt there or something. Just so you know. Anyway, no, that's awesome. The book, and I highly suggest people go to Amazon. I mean, it's on Amazon right now. I've already seen the link this morning, and so it's great. And we'll have that link as well in the show notes to that book, and so you can buy that book. And I would encourage listeners to give Danny a rating, a review also on Amazon. When you see that book, and I think you're going to be impressed by that and by the quality. But yeah, I struggle with that now. Like, how do I raise my kids or my boys to to understand money, even when they're 4 and 5, like just some understanding, just basic knowledge. And because I wasn't taught that in school, they don't even teach you how to balance checkbook for some reason. I guess they assume you'll be able to do that, but it's not taught, right? But what I think is neat that at 5 years old, you lost your wallet. Your net worth was demolished, as you said. what I find those and what we've read some books, my wife and I, and about training our children, trying to anyway, in money but it's by like giving them some jobs now and so they can earn some money, so they can make big mistakes with $5 and $10 and lose it all and experience that with $5 and $10 or $20 or whatever before you hand them a credit card when they're 18 or 19 or and they've never handled money before and have no idea.
Yeah, I think that is phenomenal. And one of the things have done with this first book and will continue to do is I give practical lessons and ways to practice after you finish the book. So it's a way to continue to interact with your kids on a regular basis and talk about the lesson from the book, but also about money and kind of finance. So you can, do some of the things that I found that worked well for me growing up and how I kind of practiced. And like you said, I think it's incredibly important that people, know how to balance a checkbook, but know what money can be used for. Like you said, make those $5 and $10 mistakes now versus getting down the road at 18 and making way larger or more expensive mistakes, where it's going to be difficult to overcome or may negatively impact their credit score, which would prevent them from buying real estate, which is something, I think we all can agree that we want our children or the people around us to do and invest in real estate. And so I think that's incredibly important. And I wanted to say one more thing about the $5 and $10 mistakes. Yes. Also about what they're going to use the money for. So I think it would be great if they kind of waste their money on a frivolous purchase today with $10 versus when they have $10,000, how do we put the money to higher and better use and learn that consumer products are not going to fulfill you like a investment property may fulfill you, because you're going to continue to generate income from that property, and kind of learn that at a young age, I think is very important.
Learning a little patience, isn't it?
Exactly.
Not blowing that $5 right now.
Yep.
Or $1,000 once you get a little older, or, seeing that new shiny car and you got to have it right now. And yeah,
exactly.
No, I appreciate that, Danny. I look forward to getting that book and going through that with my boys. But yeah. Like I said, I encourage listeners to go to Amazon and look at that book. We'll have the link in the show notes.
Cool.
But Danny, tell us. I'd like to jump right into, your company and your all's, why don't you give us a little more details on your all's buying criteria? So like, what are you telling a broker, or what are you, like, this is our guidelines. This is what we are looking for, or I'm not wasting my time on it. So like, just right off so you can narrow this, the deal flow down.
Yep. My kind of 30-second spiel with a broker is we look for value add multifamily properties that are 150 units or greater, built from 1980 to about 2005 or 2010. Ideally, we look for C-class or B-class properties that we can add value to through unit renovations and exterior improvements to increase the rental income per unit, to increase it to market or just below competitive market value. And so that's kind of the initial conversation, the initial criteria with a broker. And then we kind of weed through those deals. Typically, I also give the broker that purchase price range of 10 to 50 million, because the properties that we may look for that are 150 units that may trade for like $3 or $5 million may not be in the areas that we focus in. And so it's one way to kind of remove some of that deal flow from getting bogged down and looking at things that you don't really want to look at. And so what we found is that price criteria is helpful for us as a team as we go through our deals. So we're not looking at hundreds of deals in a given month, but we're looking at a quality volume of like 50 deals in the month. And it's very specific to what we want, where we want, and markets that we know.
Yeah, so that raises another question, or a few questions. But as far as, how many deals are you trying to look at per month? Like or let's say, how many deals are you actually underwriting heavily? Like really getting into the weeds with, say, on a monthly basis.
I would say about 20 deals we'll get to. Maybe it's 15 to 25 in a given month, but we're not doing deep dive underwriting on every deal that hits our email. We're qualifying the deal first on location criteria and high level financial indicators. So I'll take a look at what the rent roll currently is, what we think we could get it up to, and do the high level, gross income, expenses, and net operating income make sense for what it is today and where we think we could get it in 1 to 5 years. And if it qualifies and we think it's a return that is achievable and conservative and will fulfill the requirements of us and our investors, then we'll pursue it. And so a lot of the deals that we get, we really don't pursue in that full underwriting detail because they don't qualify from a high level. And so that's one thing that you kind of learn over time of what qualifies. If you are new to syndication, I think you should underwrite fully every deal that comes in just to kind of learn the process and learn what levers you need to really identify and where you have the capability as an operator to make an impact on the valuation of that property. And when I say valuation, I mean doing whatever it takes to increase the NOI, the net operating income that property generates. And so once you kind of hone that skill and you've underwritten a lot of deals, you can quickly see where a deal won't make sense and you kind of pass on it pretty quickly and you move on to the next one.
I like that. Underwriting many deals, and especially if it's in the same market as well, right? I mean, you're just educating yourself about that market more and more, about underwriting
Absolutely.
and about the market, just what other deals are trading for, and there's specific problems in certain markets that you won't have in other markets. Right?
Certainly.
So, but give us what's a few examples of what would kill a deal for you all, maybe at a high level, and then we'll get into the weeds a little bit. But maybe it's one that you said, okay, I should underwrite this deal a little further. But what are some things that are going to kill it for you all?
Some things that will kill the deal when we get into our full underwriting and assuming that it qualifies for our kind of range of construction, year built criteria, and it's in the right location, the high level numbers look good. In the details, what will kill a deal for us, number one, is if our rent premiums are not achievable in that market. And what I mean by that is if we are projecting the highest rent of all of the competition around us, given our interior and exterior quality is about the same, then that will kill a deal because we don't want to be the market leader in rents. We don't want to be the ones giving concessions away. And it is hard to believe that someone who wants to pay, $1,000 to $1,500 to rent an apartment is going to pay extra just because you have a little bit fancier of a unit. And so being the market leader in terms of rent per unit or rent per square foot is something that we will not do. And that will kill a deal for us if we need to project such a premium in rent to make our numbers work. That will kill a deal. Another thing in our underwriting that will kill a deal is if we can't control a lot of our expenses. And so if the current property has exorbitant expenses and we can't seem to understand why they're so much, or what has been going on. And usually those are detailed conversations with the broker or the seller about why are these specific line items so high? Is there something that we don't know? And that's probably the case. And so we'll ask 500 questions to understand and really give us the lay of the land and the details of why the property is operating like that. And so if we can't understand and control the expenses, that will kill a deal for us.
And you're going to understand that better by underwriting all those deals in that market as well, right? I mean, you're going to see, okay,
Absolutely.
wait a minute, your all's whatever the expense may be is twice as high or a third higher than the last 10 properties I've underwritten in this market, or
Absolutely.
close by. So what about after is there an example of a deal where you all thought, okay, you've underwritten it, this is looking really good, we're moving forward, and let's say you're really close to that LOI, or you're really thinking, okay, we're going to pursue this opportunity, but then something killed it. Then is any examples like that you all have experienced lately?
I can't say we get to that process of being ready to write an LOI and a deal is killed for us. If there's something odd that pops up in due diligence, or maybe you learn after the fact of some sort of operational, or maybe there was a recent insurance incident at the property that you don't really have control over, that could kill a deal. But typically by the time we've spent a lot of hours going through our initial criteria, going through our full detailed underwriting, we are very confident in writing an LOI and submitting for that property. At that point, there should be no surprises for us. Obviously, we look for them and ask about if there's anything and continue to have our eyes and ears to the ground about that property. But, we fully vet prior to writing an LOI. And I think that's one way, the real estate syndication show listeners can benefit if you can have those conversations with a broker that says, look, when we write an LOI and we're awarded a deal, we close no matter what, because we've done our thorough due diligence and we're not going to be surprised by any major issue that comes up. And yeah, you may have a random thing here or there that may be a few $1,000s, but it shouldn't impact your numbers to the point where you're surprised or shocked by it to change that. And so by the time we submit an LOI, we are prepared to close on that unless a surprise comes up that we don't know about.
Awesome. No, I like that answer. It is a lot about your due diligence, right? And learning as much as you possibly can about this before you ever get to that point.
Yeah.
So, but not being afraid to walk away if it,
certainly
something comes up as well. But so, I get this question a lot about people say, well, that are just learning about syndication, they're like, structuring a deal. What does that mean? What does that look like? Somebody's talking about structuring a deal. What are they talking about, Danny? And, just explain that a little bit. And then let's get into a little bit maybe about a recent deal that you all worked on and how it was structured and why.
Yeah. So from a structure perspective, I would say there's a few things that you need to get right from a structuring perspective. The number one is the loan or the debt structure that you're going to use. So you need to find a couple of lenders to quote debt options for the deal. They're going to be your largest partner. So they have a material impact to the success or detriment to your project. So find a good lender to work with. The other piece inside of that lender kind of debt area that you need to resolve is, do you have any experience owning multifamily properties? Most lenders will require a certain resume, meaning you have experience, for them to feel comfortable giving you a multi-million-dollar loan for a 150 unit apartment community.
And rightfully so.
Right. So if you don't have any experience, you need to bring on a loan guarantor or a key principal as part of your general partnership team. And this is where the structure comes in to help you with that area. So item one is your loan and debt configuration. And can you do that yourself? Or do you need to bring in a loan guarantor or a key principal to help with the experience and the net worth and the liquidity to qualify for the loan? So we've got the first one figured out, the loan piece. The second piece to it is your equity portion. So now that your large debt partner is resolved, the second item is your equity portion. And equity portion is your investors. So either you are going to pay for the remaining equity out of your own pocket, or you're going to syndicate it, in which we're listening to the syndication show. So I'm expecting you've got high net worth investors or friends and family that are ready and willing and able to invest in your deal. Thus, they would come in on the equity side of things. Now, if you've never raised for a syndication deal before, raising money is a lot harder than you may think. So you may want to bring in a couple of partners to help raise money who have done it before. And for that, they would become part of the general partnership structure as well. And so now you've got your second component, your equity portion of your general partnership structure. The third portion is really the kind of ongoing and day-to-day asset manager who oversees the deal and ensures that the business plan and that property value add strategy is being carried out. And you work with the management company on a regular basis to ensure that numbers are being hit and the property is moving in the right direction. The fourth component would be, I'm just going to say other, for anyone else that falls into that other GP part of the team. So maybe you work with a partner today and you guys and gals run your opportunities as a team. And so they would fit into that general partnership structure as well. Maybe you need an expert to come into that other category who knows the ins and outs of multifamily value add strategy if you're doing a deep unit renovation. And what I mean by deep unit renovation is it's more than just kind of like floor paint and appliances, but maybe you're doing major construction and you need a general contractor or a construction expert to fill that knowledge void to make sure you're getting the best pricing and everything's being carried out accurately. So to recap, kind of 4 areas that you need to figure out for your GP structure. Number 1 is your loan structure. Number 2 is your equity structure. Number 3 is your asset management. And number 4 is kind of your other general bucket.
No, I like that. Thank you for laying that out. So yeah, a lot of people ask about, what does that mean, when they're getting started? Because you hear that term a lot, structuring, of the deal. And I appreciate you laying out those things that we have to have or that we need in place. It's, most people don't think about the loan structure or what that looks like, or creating that relationship, with that bank or that lending however you're finding your debt, you got to find it, right? So, it's so important. Go ahead.
Yeah, I was just going to say, a lot of people, it's a misconception that you can just go out and syndicate a deal. It takes a lot of work to do it at a high level where you're buying 150 unit, a $10 million plus deal. You just need to go through the steps and get there. And so if you're new and you want to do really large apartment deals, I think the best way to start out is to invest as a limited partner to learn the ins and outs, gain some of that resume building experience to say that you're an owner of a property. Yes, you have experience owning multifamily, and then that kind of builds the story that you can work with the lenders on to kind of qualify for the deals and know the ins and outs of investor relations and everything it takes to be a professional and at the very top of the syndication game.
Nice. Danny, unfortunately, we're about out of time, but I wanted to ask you, what's the one thing that's contributed to your success?
Determination. And what I mean by determination is having a laser focused vision and being determined to achieve what we set out as our goals without having any excuses for not achieving them. Ultimately, it's my responsibility to make sure that, anything I put my mind to works. And, plan A may not work, but I'm flexible and I'm willing to go to plan B, plan C, plan D, whatever it takes to get to that goal and achieve that vision. So determination.
I like that. And, getting started, you think, oh, if I hear somebody else talk about mindset, or if I hear somebody else talk about their why or whatever, let's, initially my thought was like, let's get to the meat and potatoes, let's, stop telling me about, but the longer I'm in this, I'm like, it's just key, that your determination, your mindset, and it's so important. It's important in the next book you're going to read that you're determined before you get to that book, to get through the book even, or create the goals and what are the next steps. And because it's not just walking on rose petals, is it?
No, absolutely. And I think, within real estate and within syndication, you're going to learn something new every day. And so you're going to come up against obstacles that you don't know about. So you better be determined to learn how to adapt and be flexible to overcome those obstacles. And I think that's, again, going back to determination and why it's so important to have that mindset right before you get started, because you will encounter an obstacle, and being determined and being willing to learn is going to get you to where you want to go.
Nice. Danny, tell the listeners, is there some way you like to give back?
Yeah, I give back by helping volunteer through the First Tee. It is a wonderful program to teach kids about life through the game of golf.
Interesting. I've never heard of that one. That's a new one on me. Thanks for sharing about that and for giving back in that way. How the listeners learn more about you?
You can go to Randazzo Capital to learn more about what we have going on with our books and with our blog and kind of what we do on a daily basis. If you're interested in being a limited partner with us on our syndication opportunities, go to passiveinvesting.com.
Nice. Thanks again, Danny. I always appreciate your time and your sharing your knowledge on the show. Danny was on a previous show way back when we got started, and I would encourage people to also go back and listen to him there and hear more about his story and getting started. But thanks again, Danny. I hope the listeners will buy your book, go to Amazon and pick up his book. We'll have the link in the show notes. Also go to Life Bridge Capital and connect with me, and go to our Facebook group, the Real Estate Syndication Show, so we can all connect with experts like Danny and grow our businesses together. Have a great afternoon. We'll talk to you all tomorrow.
Thank you, Whitney.
Thank you for listening to the Real Estate Syndication Show, brought to you by Life Bridge Capital. Life Bridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. Life Bridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.